We are going to look at gold. Starting with gold, I think we'll have GBP USD. And we had a trade also on Xauusd USD, which is silver. So we'll have a look at those three examples. Three, because that is where we had some setups. Now starting with gold, in the daily time frame we have a fair value gap. This trade happened yesterday, so we had this fair value gap, and then we had change the color of this to blue. So having this fair value gap, we have price reacting off it, giving us an engulfing candle outside of this daily fair value gap. So let me just rename it to daily fair value gap. So price, which is the Thursday candle, reacted off this daily fair value gap, giving us an engulfing candle. This candle engulfs this, so as a result this candle gives us a dealing range. Let me do a quick edit on my dealing range. I usually use Fibonacci to plot my dealing range, and I only need two levels, the 0 level, 0.5 and 1. With this dealing range, you'll notice may use that background color again. You'll notice price comes to the 50%. You can see this 0.5 or 50% of this dealing range right here, and this was Monday, which was yesterday. I'm doing this trade review today, which is Tuesday at 12:42 p.m. East African time. So dropping to the lower time frame, go to the 4-hour time frame. This is the 50% or 0.5%. Going to the 1 hour 15 minutes. I think I used the 15 minutes time frame. Yeah, so in the 15-minute time frame on Monday, price opens at this point, this candle here. That was our price opening, and then price made an impulsive move upside to this 0.5 level, and I was looking at what do we have in this level at this 0.5 where price is likely to react off of. We had this 15-minute fair value gap, right? And now we have that 15-minute fair value gap. I'm expecting price to react off this fair value gap and drop lower, and that is what happened. So what you notice is this bullish candle inside this fair value gap does not have a wick, right? And then another thing is we had a very strong bearish move to the downside, giving us a one candle change instead of delivery, and that also gives us a dealing range where we expect to take an entry from. So this dealing range up to this point, and then we are further supported by the fact that this candle bearish, this bullish candle here does not have a wick, so price has to retrace to this level to give us, to put a wick on this level and also give us an entry. So with that in place, you'll notice price at around 7 retraces into this level. We have a 50% dealing range, the daily time frame dealing range, and then we have this 15-minute dealing range right here, where now we take an entry. As soon as price gets to this level, this 0.5% level, you want to take a sell there. stop loss just above this dealing range, and take profit. You are targeting lows this previous day lows right here, and these was a 7.34. The price never got back to it, and we are now in the new day, which is Tuesday, and we have a different setup coming up. So this is gold for you. Going to XAG. XAG is a trade that happened today, starting off in the 4-hour time frame. So we have this bearish situation right here, and we have this fair value gap here. Right, so in the 4-hour time frame, this bearish has given us a dealing range because it is an engulfing of this 15-minute time frame, not this up to this point. It's an engulfing of this 15-minute, this 4-hour fair value gap. So our expectation is that price will get to this 4-hour fair value gap. Now price will get to this 50% of this dealing range and then drop. But as we were anticipating for that, we had a new day open. Where was our new day open? Our new day open was here on this candle, and then you'll notice we had an impulsive move to the downside and then up, and this gave us a lower dealing range. So I'll just mark this as my 4-hour premium. I'm expecting price to get to it and react. Now because we have that expectancy and we have this situation down here, we also mark this dealing range, because now this is a sign that we had this Friday lows taken, this lower right here taken, and then we had this Monday low taken by this candle, and then price closed above it in this dealing range. So in this range, in the range of this candle. So now since this came up before we could come back to this premium, now we expected price to react off this 0.5 level and push price into this level. This is coming off a key level, a very old fair value gap, if I'm not wrong. It is this one here. So this 4-hour fair value gap. So price is reacting off this 4-hour. This is a fair value gap. And also, if there is another way to look at it, is we have a bullish engulfing candle from this fair value gap, and now price is back to this dealing range to give us another setup. The first setup was here, and now we have another setup. So dropping to the lower time frame, we want to see what was happening in this area. First of all, let me just mark where we expect our entries to begin from. Expecting entries to begin from this point. So 15-minute time frame, we have a fair value gap in the lower half of this dealing range, and this is the fair value gap right here. Right there. And now we had price reacting off this fair value gap. This is the 15-minute fair value gap. And the new 4-hour candle opens right here. So this is the 6 a.m. then 6:15, 6:30. So this 6:30 candle closes above this 15-minute fair value gap. This is an inverted fair value gap, not a fair value gap. So this this candle closes above this inverted fair value gap, giving us a lower time frame dealing range, which is now the 15-minute dealing range. And again, you'll notice price retraces into this, the 50% of this dealing range, or 0.5%, and then we have now that becomes now an entry for us. Still in the 15-minute time frame, that becomes an entry for us. You can see that a stop loss just below this dealing range, and then we target. As we had an expectation, we are expecting price to retrace into this 4-hour premium that came out of this 4-hour fair value gap. So that is a target. However, my initial target was this swing highs right here, this relative equal highs, and that gave us 7.1. However, someone could hold up to this 4-hour premium zone, where now price was going to, he's headed to. So if you drop even lower to 5-minute time frames, that entry becomes even much clearer, because now we have this bearish candle into this fair value gap, and then we have these 2, 3, 1, 2, 3, 4 candles giving us a dealing range out of this. Reason we do that is because this final candle here is the one that gives us a 1 candle CISD, or change in state of delivery, against this bearish candle that terminated into this fair value gap. So this right here is 1 candle change in state of delivery, or a change in state of delivery, or others will call it market structure shift. So the moment that does happen, this range from this candle to the lowest point of this range candle gives us a dealing range, and the expectancy is price to tag into the 50% of this dealing range, and we take an entry targeting various points. So first take profit, and then second take profit at this relative equal highs, and that is XAUUSD or silver. And then looking at gold, so actually going back to XAUUSD, we are expecting price to come back into this 4-hour premium right here, and we have a few key areas that we are expecting price to react off of. First of all, we have this inverted fair value gap, 15-minute fair value gap in this premium, where we want now price to give us a reaction of. If price gives a reaction of this area, giving us a dealing range, 15-minute dealing range, will take an entry now to go lower and clear these lows, and probably will have a bearish day. So that is it for XAUUSD. Right, so going to Gbpusd, we had also something happening in this area. If you understand about CRT high and CRT low, or the power of 3, this is a good opportunity to take an entry. We had this bearish candle, and then we had these relative equal highs, right? Relative equal highs, relative equal lows. So we had an expansion lower, and then a consolidation, and then price clearing this lower sell side liquidity, or this lower relative equal lows, and then closing inside back inside this range, and this candle here gave us a dealing range. It gives us a dealing range, and you can see price reacts of the 50% of this dealing range, or 0.5%, or 0.5 level of that dealing range, and targets are these relative equal highs. And now we have price terminating into this fair value gap, and probably we are expecting to have an engulfing candle of this fair value gap to drop lower. But sticking to this, we also want to look at what is price reacting off of at this point, and we had a very old fair value gap. I think this week reacting off an old fair value gap. I can't seem to find it. I think I found it. It's not that. It's not that. You're trying to find where price was reacting off for this level. Sometimes I don't bother looking because when that happens, I automatically assume price is reacting off a key area or an old fair value gap. So trying to find it. So this fair value gap is from Wednesday, June 25th, which was last month but one. So you can see that is a very old area where price is now reacting off of. So having established that these are for our fair value gap from June 25th, this dealing range, and then we are expecting price to react off the 50% level on this candle and give us buy. So dropping to the 15-minute time frame, we have price trading higher as the new candle opens. So we have the new 4-hour candle opening at this point at 5 a.m. right? This is Gbpusd. As that is happening, we are expecting price to drop to this level and go up, and now we had this fair value gap right here. Now with this fair value gap in place, now we had price now opening and going high. So let's look at the 5-minute time frame to see what we had happening. So in the 5-minute time frame, we had this bullish closure into this fair value gap. This is a 15-minute. Is it inverted? This is inverted fair value gap. 15-minute inverted fair value gap. Right, so a 5-minute closure into this 5-minute inverted fair value gap, and then a bullish candle, and the second bullish candle gives us a change in state of delivery, and now we have this dealing range to work with, right, from this high to this low, the lowest point of that area. And now the moment this candle closes, the next one opens bearish, taps into the 50% level, and the next candle opens while still at the 50% level of this dealing range and shoots up. So this is the 5-minute time frame. There's no need to look for other things. You just take an entry at this point, stop loss below that dealing range, and you want now to target your take profits. We have this relative equal highs. We have this high right here, which will give 3.89, and then this relative equal highs at 6.11, and then this relative equal highs at 8.59. So just like that, you had an 8.59 trade off this area. Those are the reviews for trades I took for the setups I saw yesterday and today. Gold was yesterday. You can see this gave us a what? It gave us up to, let me mark the new day open. New day open was at around this area. So we had a close of that day at that point. And then so this was around 6.37, reducing it back to around 6 will be 9, because we don't hold a trade overnight. For us, this is at 7 p.m. on Monday. The trade closed at 6R, and then we had today's trade taking place on silver, targeting these highs, that is 7 risk to reward ratio, and then we had gold giving us an 8.59, targeting this. This happened today, so this trade can still be held, but we had a very crazy consolidation at this place. So once we have this 8.59R, that is good. So now the total risk to reward, we had 6 plus 8, we have 14 plus 6, a total of 20R. That is yesterday and today. Okay, so those are the trade reviews for silver, gold, and GBP/USD. I hope you've learned something. Have a fantastic time and have a profitable trading week. Bye bye.